Investors weren't expecting an interest rate cut from the Reserve Bank, but it was the big four banks that led a slide on the local bourse. I spoke to Padley from Patersons Securites a little earlier. Well, Padley, the Reserve Bank held steady on interest rates, no surprises there. But was there anything in the statement that was market moving for our shares?
Well, the Aussie dollar jumped a little bit, and I think that's because basically the statement was a little bit more relaxed than we thought it might have been with all the problems going on overseas. They were talking about growth at trend and appropriate settings and no inflation risk, and just seemed to be rather ignoring the flustered state of international markets. And I think that sort of relaxed feeling made everyone think that interest rates aren't about to come down. And on the back of that, as I say, Aussie dollar went up and bond yields went up a bit.
Now, a bad day all round for the major banks, I see.
The banks have had a very good run. If we look at what they've done in the last couple of months, the CBA has been up 37%, ANZ 23%, Westpac 25%, NAB 16%, all in the period of a month and a bit. So they've had a good run. They're just coming off the top a little bit. They ran in basically a void of European news. If you remember, they were all on holiday and left us with the statement the ECB would preserve the euro at all costs, and that was a sort of relaxed feeling for the whole sector. Plus we had the CBA running into its dividend and stuff. So they're all sort of coming off the top a little bit now as the European risk heightens with the ECB meeting on Thursday. But I think you'll find if they do come down too far, they have got results at the end of October, beginning of November. They'll probably be bought again into the results. The market's focused still on income, and this is one of the best sectors.
Now, we've heard about Fortescue's difficulties, but that wasn't the only iron ore stock floundering, I gather.
No, look, Atlas Iron is the other major producer. Their share price is down 70% in a year now and has been belted along with the iron ore price, which is down 40% since April. And as the iron ore price gets close to $90, our analysts reckon the cost of production for Atlas is somewhere around $80 a tonne. Which obviously means if the iron ore price falls a bit further, some of their operations become a bit marginal, and that compares with sort of BHP and Rio producing around $45–50 a tonne.
Really biting this iron ore price. That the mining services companies also perform poorly.
Yes, and the sector's really had a terrible run of late after the BHP announcement they're cancelling projects. And on the front of the AFR, there's another article saying that there's in total $119 billion worth of projects, including some large Woodside projects which will be stalled, as they called it. So the whole sector came off, and Boart Longyear, which fell 40% last week on results, fell 15 cents, having gone ex-dividend 6 cents, so fell another 10%. It just goes to show you just don't catch the knife, and in this sector, the knife is still falling.
Oh, you're a barrel of laughs today, Padley. Thank you very much for joining us.
My pleasure, Tiki.